Why are we forcing to pay to the government every year? The money that you pay to the government is called tax, and we will use this money to benefit your life. And let's head to the meeting room, and our professional financial department manager will explain more about the meaning of the tax. Hello everyone, welcome. Let's talk about government taxation more specifically. Basically, as a government, we need money from individuals and business organizations in order to pay government spending and various public expenditures. And this money is called the taxation. And everyone has the responsibility to contribute to the goodness of our society. And there are many types of taxations. For example, there are income tax, payroll tax, property tax, and social security contributions. And the most famous harmonized sales tax, which is HST, and federal goods and service tax, which is GST. And you guys probably know that in Ontario, the HST is 13%.
After the definition, we are going to show you a typical example of taxation with simple math. There are various types of taxation. One of the most common one, which we call it income tax. Assume you have taxable income $47,630 in year 2020 with different federal tax rate. Then how are you going to calculate the amount of tax you need to pay?
If the federal tax rate between $47,630 and $95,295 is 20.5%, and we assume you have $47,630 as income of year 2020, then the amount of tax you need to pay is just multiply your income by the federal tax rate here, which is $7,145 after the calculation. And this is the math calculation for taxation example.
Engineers typically work for companies that pay taxes, or as freelance workers who pay taxes themselves. Cutting taxes can stimulate growth and create engineering jobs, while raising taxes increases government revenues, allowing them to undertake projects that employ engineers. Governments need to manipulate their tax rate to adjust for the needs of economic growth and revenue generation simultaneously. This has a large impact on the engineering sector. Engineering firms and individual contractors look to improve their bottom line through tax write-offs. For example, an individual contractor might apply for a home office tax exemption, while a large engineering firm might apply for an office or employment tax exemption. These tax write-offs help stimulate the engineering economy and encourage engineering projects to go forward. Companies will also consider things like the minimal accepted rate of return, or the MARR. The minimal accepted rate of return offers a threshold which needs to be met, which is more attractive than any other opportunity cost that they could incur. If taxes are low enough, the minimal accepted rate of return also becomes more easily reached. This also helps companies to go forward with engineering projects.
So how does economics, engineering, and taxation compare to one another? Government taxation can be compared to engineering economics as it branches into microeconomics. The expenditures that governments spend on funding is sometimes infrastructure, research, and etc. When projects like this arise, engineers must use the principles of engineering economics to make the best possible decisions when looking at materials, cost, and etc. What would be the main difference between the two? The difference between taxation principle and engineering economics is that taxation deals with just numbers based on a certain price or income, whereas engineering economics deals with various factors that affect the final results of a project in terms of cost. In both instances, taxes do come into play, but more factors are taken into account when looking through the lens of engineering economics.
Can you give me an example how to calculate taxes in engineering economics? For the company to calculate taxes, they have to look at various things like revenue, operating expenses, assets depreciation, and operating cost of the project. From this, they get a taxable income. Based on the taxable income, it shows how much tax they have to pay to the government. I will give you an example by calculating taxes in engineering economics that will give you a broader idea. For example, let's just say for a company, revenue is $500,000 and the operating expense is $100,000 and the asset depreciation is $92,885. Operating cost of the project, let's just say, is $92,000. To calculate the taxable income is revenue minus the operating expenses minus the asset depreciation minus the operating cost of the project. So for example, it's 500,000 minus 100,000 minus 92,000 minus 92,000. For the taxable income is now $215,000. Now we times it by the tax rate, which is 11.5. So we will get 24,738.22. This is how much they have to pay the government. That's the taxable income we get. Oh, okay, that's how you calculate taxes in engineering economics.